Welcome to a brand new episode of Limelight featuring India's most admirable brands, brought to you by The Brand Story. Limelight is a unique initiative that helps a company establish itself as a thought leader in its respective industry category. This is a perfect opportunity for a company to showcase its strengths by elaborating on its products, technology, customers and partners, its strategy and vision for the future, and much more, thus cutting through the clutter and making a place for itself in this competitive world. Our guest for today is Mr. Tashwinder Singh, Managing Director and Chief Executive Officer of Niyogin Fintech Limited. Mr. Tashwinder comes with more than 28 years of leadership experience in both strategic and operational roles. He was associated with Citigroup and KKR in his previous roles. During his extensive career in the banking industry, he has built considerable expertise in the fields of investment banking, deal diligence, and principal investing in India. He joined Niyogin in October 2020, and under his leadership, Niyogin has undergone a complete transformation. Speaking of Niyogin, this company is the brainchild of two friends, Amit Rajpal and Gaurav Patankar. India has had a conducive atmosphere for small businesses to thrive in, but lacked a platform that could understand, support, and therefore enhance the potential of these businesses across domains. To support and empower these small businesses, Niyogin was born. Niyogin, which is the Sanskrit word for empowerment, was incorporated with a deep understanding of the real daily problems of small businesses. So, without further ado, let's understand more about Niyogin from Mr. Tashwinder Singh, or Tash, as he is fondly known. Hello Tash, welcome to our show. To begin with, we would like to understand what Niyogin does and how is it different from hundreds of fintechs that have cropped up in the Indian landscape in the last few decades.
2017, Niyogin was started largely as a credit providing company, providing credit to MSMEs. And the whole philosophy or the thesis was that India continues to be a capital-starved economy. And when you start looking at the MSMEs, the lack of capital is even more acute, and that was the focus area. But I think we pivoted very early on in our journey to understand that credit, lending, etc., requires deep insights and differentiated information about the borrower if you want to be successful. So we pivoted away from that line of business and developed what I think is a very interesting model that we currently follow, which has created the whole platform-centric approach, wherein we said we would create the tech stack for creating a platform that can help MSMEs get solutions, both financial and non-financial, and then provide all the solutions to them. So that was our initial thought process. Now, what we also did was that we pivoted against this model and we created a differentiated way to approach the market. Our partnership-led approach gives us a low-cost access to clients. And I'll explain that to you in more detail. But what it does basically is that rather than dealing with the MSME directly, we'll end up approaching entities that have large storefronts, and then we use them to provide our tech stack to them, which they can then deploy in their retail front ends and use our tech stack to deliver the final solutions. One of the other questions you asked me is how are we different from other fintechs, right? One of the big things about our company is that we've been very, very focused on the bottom line. I think in a pretty early part of our evolution, right, which was last year, we delivered almost 2x growth in our revenues, and we were EBITDA positive, right? So not too many fintechs are EBITDA positive so early in their journey.
True.
And I think our focus continues to be that, use a mechanism whereby we are able to manage our costs in the most efficient way, right? And deliver numbers to our shareholders.
Wow, that was a very detailed explanation on what the company is doing. Thank you. Given that Niyogin is dealing with partners, I understand that yours is a B2B company. So to break this down further, could you tell us who exactly would be potential partners for Niyogin?
Yeah. So we have three broad customer sets that we focus our energies on, right? The first is the business correspondents. These are entities, could be entities with large storefronts or could be storefronts, individual kirana stores, etc., that are basically focused on providing banking services. So our platform provides them with the entire tech stack to be able to deliver banking services to the ecosystem that they operate in. So that's one set of customers.
Okay.
The other set of customers are the new age companies, fintech companies, etc., which have the aspiration to become neobanks. Now, we are not a neobank, but we have the tech stack to be able to provide, to help these companies provide neobanking solutions to their customers. So we are able to give them a plug and play approach whereby they could come to us and we could give them the entire stack of being able to become, effectively a neobank. And the third set of customers are really banks. There are tons of banks in India that have digital aspirations. We are helping power their digital aspirations for a bunch of banks.
Very interesting. Could you tell us more about your recent partnerships and how are these various partnerships aligned with your ultimate vision?
So Ivan, it's, we have to understand the landscape of our country. There are 63 million retail stores that exist in the country. There are less than 300,000 ATMs in the country. Now just look at that example, right? We are talking about 1.4 billion people, 800 million people living in rural India, 63 million retail stores and 300,000 ATMs, right? So our motivation is to go and convert as many retail stores as we can into effectively becoming, delivering banking solutions, right? Banking services. So our approach to partnerships is to really look at those that have this infrastructure built out, right? So large institutions like a lot of microfinance companies like Bhafin, for example, or you look at India Post, which I think is arguably one of the most widespread network in the country.
Right.
These are the kind of customers that we go and talk to in sort of offering our tech stack to them to be able to deliver the entire stack of financial inclusion transactions to this network. So that's the focus for us. Again, the idea is that when you go to these enterprise customers, you're able to get a large footprint of retail stores on the ground, right? And the delivery of our tech stack is pretty standard, pretty straightforward. So it doesn't take a lot of effort other than the initial deep integration that goes in to enable these customers to use our tech stack. And then we've tried to make sure that the user experience, right, which is the kirana store using our tech stack to deliver the services, is pretty straightforward. So when you put all of this together, it's a pretty interesting outcome out there.
Sure.
Rather than going kirana store by kirana store, we are going after the enterprise customers, which allow us to get access to a large footprint of retail stores.
Right. That's very impressive. Tash, I see your company has been doing and able to bag some really good partnerships. How do you ensure the continuity and scale of these partnerships though?
So Ivan, this is a technology business, right? And the beauty about most technology businesses are that there's a good and the bad. The good is that once you get plugged into a network, it becomes very difficult to be taken out unless your services don't deliver what you promise to deliver.
True.
Right? So I think that's really something that we use to our advantage. If each of our partners, we have deep integration and there is a cost to integration, right? So once someone goes through the integration, and mind you, that also means that before a customer selects us, they go through a high degree of evaluation because they all understand that there is going to be significant level of integration that's going to be required, right? So that by itself is a hook in some form, right? That you've decided to work with us and we've got integrated into your platform. It might be your app and we've just installed an SDK into your app, SDK being a software development kit into your app. So that works quite well. The second thing which is important is how good is our service? How good is the experience that customers get who are coming into a kirana store to withdraw cash or to make a funds transfer or to buy insurance or to do any other banking transaction? Is that experience really good? Are there fail rates? Or what are the success rates of those transactions? These are all data that we track very closely to make sure our customers are getting the best experience, number two. And number three is to keep expanding your product stack. What the kirana store cares about is that he or she should be able to deliver a multitude of services to the customers that walk into his store. Our job is to make sure that there are incremental products being offered on the same platform for him or her to be able to deliver incremental services and therefore make more money. So when you put all of this together, it creates a certain stickiness in the network, which I think is very important for our business.
It's great to hear. May I ask you, how do your partners learn about your brand and what exactly is unique about it?
So I mean, we are not a B2C business, right? So you don't see us advertising, right? We don't advertise in the public domain. But I think we have our own way of reaching out to the larger footprints. We have a sales team on the ground. They're out there meeting customers. Like I mentioned, could be microfinance companies, could be retail stores, large footprint, branded stores, etc. And then we go and there is a certain sense of education that's part of our sales process, and then there's obviously delivery. So word of mouth helps. Our execution capability helps in certain geographies. As certain retail stores start delivering our product, other stores get excited to know what's going on, and therefore we get a lot of inbounds. So it's a very interesting play. There are multiple ways in which our business is now spreading, across the network.
Okay.
Like I said, it's a very, very large footprint out there, and we are biting, what we can chew.
Dash, how are you serving these partnerships, and what are the key products and solutions provided by Niyogin?
So when I speak about financial inclusion, Ivan, the main products that get delivered in the financial inclusion tech stack are really the micro ATM solution, which allows a customer to withdraw money from their bank account using their debit card.
Right.
Or it could be an Aadhaar-enabled payment solution, which is a customer walking into a Kirana store and withdrawing money from his or her bank account using their fingerprint and just the Aadhaar number. Or it could be a domestic money transfer where you want to send money to somebody, within the system, which you want to initiate by cash. Because if you had, electronic money sitting in your bank account, you could just use UPI to transfer money. But what do you do if you're sitting with some cash and you want to transfer that money?
Right.
So our domestic money transfer solution takes that into account. Now, these are the three basic products. On top of that, if you add insurance, because when you go into rural India, you realize everyone has a bike or a two-wheeler. Everyone needs to buy two-wheeler insurance, right? Why should they not be able to walk into a Kirana store and buy insurance? Or they could apply for a loan, which is an important product. As we spoke earlier, credit continues to be an important lever for growth for many companies, and it's a big need for the market. Or it could be a simple thing like providing the technology to be able to use the point of sale solution for plastic in case people are using plastic. So there are multitude of solutions that we are able to provide. Our motivation is to be the API infrastructure play. We want to own the backbone. We spoke about the footprint of retail stores, etc., big companies opening up, lots of new fintechs out there. Everyone requires some kind of a tech stack when it comes to financial transactions. We want to be the backbone that is building use cases on top of the India stack that the government of India has created, and then be the go-to person when people want to just get a plug-and-play approach for any of these products. So our customers may not use all our products, but the beauty is everything is available off the shelf.
Ash, could you explain how the lending that you are doing today is different from what you started with?
Right. When we started lending, it was an unsecured business loan, right? It was just playing to the galleries of what everyone thought was a great opportunity in India, that you could lend to the MSMEs because there was deep capital starvation in the country. And we quickly figured out that that's probably not the way we want to go forward, and scale would have been an issue if we only did that. What we're doing today, having built out the entire banking as a service stack, and we have more than call it 400,000 retail stores that are using our platform today.
Okay.
We're finding that we have tons of information, tons of data about transactions that get transacted by those people. Right. Using that data to underwrite appropriately, using that as an input to decide who to lend to and not to lend to, is turning out to be a very different way of providing credit. So what we are doing today is we are providing capital. We are also an NBFC, as you know.
Right.
We are able to use the NBFC license and the capital that we have to provide credit to customers who are using our platform for doing other things, right? So people using retail stores using our platform to do, the financial inclusion products are also able to get credit from us to expand their businesses or to expand the amount of business that they can do on our platform. So it's a double whammy that we get, right? When we are able to provide credit and use that to expand the level of business they do with us on the, cash withdrawal product, for example. So that's what we're doing.
That's quite amazing, Tash. Well, coming back to the rural tech side of the business, why would a rural individual go to the retail store to withdraw money instead of a bank? And as a follow-up, do you think he would be able to trust the retailer with his money?
So it's really a matter of convenience, Ivan. If you break this up and let's look at it from the bank's perspective and let's look at it from the individual consumer's perspective, right? From a bank's perspective, a bank is serving all kinds of customers. There are corporates, there are MSMEs, there are individuals, retail, etc. Right? And opening branches all entail a certain amount of cost, right?
Yes.
As you go deeper into the hinterland in India, right? Opening branches, though, and financial inclusion, though socially constructive, can sometimes be quite loss-making for a bank because they have to incur a certain amount of fixed cost,
Yes.
right? So for banks, if you are able to provide service to their customers, don't forget the rural individual is a client of the bank. If that customer can be served without incurring the fixed cost, and if we convert that serving process to be a variabilized cost structure, I think the banks like it. And that's exactly what we're doing from a bank standpoint, right? We are basically telling them, you don't need to open the branch because your customer will get served. I mean, you can open the branch if you want to do other things, but not only to serve your customers. If you look at it from the consumer standpoint, what does a consumer want? The consumer wants convenience. Consumer wants to know that whenever he or she wants to access his or her bank account, he can do it in a jiffy. He does not need to go stand in lines outside a bank for a couple of hours before he can go and withdraw 2, 3, 4,000 rupees.
Correct.
Can he go and do it in a more efficient manner? Right? Again, one method is to keep increasing the number of ATMs that exist in the country, which has a certain cost to it. What we're doing is we are converting the Kirana stores to effectively become ATMs, right? Where a consumer could walk in, right, get authenticated, have used technology to make sure that the risks of fraud, etc., are minimized, get authenticated, and get access to his or her bank account at no cost. Now that suddenly promotes financial inclusion. That suddenly provides comfort to the individual consumer, saying, listen, I get access to my bank account. I can draw down whatever money I want, when I want, and guess what? I don't need to pay for it because it's my own account I'm accessing.
Yes.
Now that is very powerful. So that's the proposition that we are trying to deliver for.
I totally agree with you. Building trust and a trustworthy relationship is extremely crucial when it comes to dealing with money. I just wanted to understand what exactly is the revenue model of your company, if you mind sharing that, and how sustainable is this model?
So the revenue model is actually pretty straightforward, right?
Okay.
So I think it's a transaction-led revenue model. We own the technology, we own the backbone on which all this is being transacted. For every transaction that gets done, we get paid a transaction fee.
Okay.
So our business is in some sense profitable on a per transaction basis. Unit costs, unit revenues, unit costs are extremely favorable in our business. And the idea is to keep scaling up. You see, the beauty with these businesses is that the economies of scale are tremendous because we've already invested in building out the tech stack. We've already invested in building out the pipes. Now we are spreading our wings and we are trying to, expand the footprint that is using our technology. With every incremental footprint, my incremental cost is negligible, but all the revenues that I get in actually start flowing in through the bottom line. So I think the first 2 or 3 years of our business, we've invested in building out the tech stack. Now, slowly and steadily, you will see in the next few years, we will harvest on what we've built out so far. But like I said, the footprint is huge. So we need to keep investing in making sure that we continue to remain the go-to entity when someone wants to have anything to do with financial inclusion.
Moving on to the next question, Tash, what are your plans to improve profitability?
So Ivan, profitability is about scale for us, right? I think we're already on the path. Like I mentioned last year, we had positive EBITDA. I think as we get more scale, as we build, build our footprint more broader, as we have more transactions being transacted on our platform, automatically we will increase our profitability. So that's really the focus. The focus here is to keep expanding, is to keep growing our footprint and to keep increasing our GDP.
Wonderful. Could you elaborate a little more on your hyper-growth strategy?
So hyper-growth for us, when we created this strategy and we invested our initial capital of 50 crores, towards the later part of last financial year, I think the idea was that there's a virgin market out there, and I think we should double our efforts, triple our efforts to try and make our footprint, expand faster.
Okay.
We did about 9,000 crores, give or take, of GTV last year. And I think our hypergrowth strategy was that how can we just scale this materially? And materially meant that in 3 years, can we make this 10, 11 times? So we put a target for ourselves saying by FY25, we should be at almost 1 lakh crores, right? In terms of GTV. That's a pretty significant jump.
Of course.
And not to do this without making sure that we are not focusing on the bottom line. We are focusing on the bottom line. So we set a target for ourselves saying that we will be 10 to 12% EBITDA when we get to that level.
Very interesting. My final question for you, Tash. For Niyogin to achieve these targets, what are its key focus areas over the next few years?
I think for our business, it's now all about execution. The strategy is set, the strategy is proven. We've got some very, very marquee customers who are now using our technology. So it's all about execution. It's all about expanding our platform, right? So I think we are focusing on 3 real priorities for ourselves. One is deepening our relationships, right, where we have, expanding the footprint in terms of number of customers and number of people who use our platform. And thirdly, to expand our product stack. As long as we keep increasing our product stack, all 3 of these are vectors that can lead to increase in both our top line and our bottom line. So we are focused on all these 3 things. And like I said, it's about execution all the way from here on.
Tash, I had a wonderful conversation with you. Thank you for taking time and spending time with us on our show. We wish you and Niyogin the very best going forward. Friends, that was Mr. Tashwinder Singh, Managing Director and Chief Executive Officer of Niyogin Fintech Limited, in this episode of Leading Brands and Leaders of the Nation, brought to you by The Brand Story. Do look out for more such episodes that we will bring to you from time to time. This is your host, Ivan Roderick, signing off. Bye for now.